aggressively. So we will see what the day amounts to. This has been trimmed almost in half. We had like a 0.53 this morning on the future side. It's trimmed in half. We'll see if the markets can muster up some sort of rally into the day. We do have a major options expiration on Friday with OPEX. I don't know if we have a VIX expiration this week. Let's go VIX expiration for February. What? Should be that was Friday? Saturday. All right. Anyway, we have the major Friday expiration this week. Let's break the chat up for everybody. Screen share is up and running. Yes. Okay. Chat's up and open for everyone. Very nice. We do have some earnings this week. Like to take a look at a couple of these. So Tuesday after close, Palo Alto, Toll Brothers, some notables. See if there's anything here that looks pretty decent. We can take a look and see if there's any sweeps coming in, any unusual option flows that are coming in on these after close. So I'll just highlight these really quickly. Anything in here? So anything today after close and tomorrow before the open. See if anything looks attractive, and then tomorrow we can just go to Wednesday and Thursday with the meat of the week. Carvana could be volatile, DoorDash perhaps, Royal Gold, eBay. It's been a minute since I looked at eBay. Walmart, probably one of the better performing things with consumer staples up so aggressively this year. John Deere and Caterpillar doing well this year. So yeah, we'll do some options diving. I do have a webinar today at 2:00. I'm really excited about this. This is the pinch point scanner. Let me show you. Let's go. We just pushed a really nice update for it. I'm actually really excited about it. So let me try to find it here. Okay, I'll go into the classroom. Logging in to pinch point. Going right into the scanner. It's one click away. And so we still have our 9,600 tickers, but when is this? Oh, fudge. Hang on. Let me show a screenshot. So what I have here is I have the ability to filter through the S&P, the NASDAQ by volume, as well as by direction. And then we can also get trade ideas for the get sets and the goes. So if you want to just do the NASDAQ stocks, just want to do the S&P stocks, where you're going to see a lot more of the household names, and the trade ideas will give both long puts and long calls as well as spreads. So pretty good trade ideas. And what I really like, check this out, pinch point scanner is showing, and this is rare, but something big is happening in the SPY. This is in the go zone. Okay. That doesn't happen very often. So having like a super pinch on the S&P 500 is a big deal. I happen to think that this is a play that's going to be probably pushing things lower. I think the pressure is going to be to the downside. Here is the S&P. We are leaking a little bit lower. Here's our 100-day moving average. So unless today is going to mount a decent comeback, we're just on the verge of kind of breaking, additional lows. Here's that little broadening pattern that we talked about. If the market, you connect the lows here, connect the slightly higher highs, could this be like another chop fest where the market comes down, tests the lows, there's the 100, and then it rallies back above it? Possibly. But as I warned, if we do break these lows, it does seem like open space. If we break the lows, I'd say it's open space down to about 60, 65, 50 or so. Okay, that would be my first real test for the bears to kind of say, okay, they've put on a decent charge, they've put on some pressure to the markets. Now we're down about 7 to 8% from the highs. Is that enough to, do some of the the deleveraging, flush out, the underbrush that was needed to let the markets kind of stabilize. But there's a 7% correction. Okay. Now, could it get worse? Well, of course, we could have this serve as one correction, pull back again to lower highs. This is the painful part of the trade. If there's a follow through, that's going to be the pain trade. And then from there, this is where I'm looking to get more aggressive as far as positioning. I still think, we can take some bites in here on the market, but I still think if we have a higher VIX, we just sell premium. Sell premium, use the April 2025 lows, get out of the way, let the market be noisy, let the market be choppy, let the market grind, but don't put yourself in harm's way. Okay. All right. Let me ask on, let's see here. I'm going to see if that update's getting pushed out this morning for pinch point. Replay for what, Jeff? The session yesterday or the 2 p.m.? 2 p.m. There'll be a recording of it. Yeah, there'll be a recording. So 2 p.m. Eastern time today. I think it's going to be either a member's email or it's probably going to be my member's Telegram. 2 p.m. Eastern time today. Pinch point upgrades. We're excited about that. And I'm hoping I can have it. Core trading videos. Yep. Thank you. Thank you. Yeah, I'm glad. So I mentioned that yesterday. If you are in my daily profit play, if you're in daily profit play, if you're in waterfall income, if you're in engineered options, all three of those classrooms, check out the core strategy video. Okay. Every classroom has it. Let me show you right here. So daily profit play, what do we do every single day? That's the core strategy video. For a 15-minute video, tells you what we do. Waterfall income, it's 2 strategies, but it's core strategy video. Okay. And it just describes our strategy 1, strategy 2. This is what we do every single week. We're going to have a waterfall income class today at 11:30. Engineered options, what do we do every single week? Core strategy video. Okay. So if we go into classroom, let's go daily profit play. Daily profit play. Here's your core strategy video, literally at the top. I asked this to be like front and center. So core strategy, 18-minute video. You want to know what we do every single day. And you want to, skip the 90-minute masterclass. Watch this 18-minute video. This is what we do every single day, right? Is there some flexibility in my daily profit play? Sure. Are there days that I want to be bullish only, bearish only? Sure. Are there, a few extra strategies we throw in here in a 0 DT? Sure. But every single day, this would be the easiest trade to focus on, is just watch this core strategy video. Okay. Waterfall income. Waterfall income. Core strategy video, 26 minutes. Strategy 1 and strategy 2. It's what we do every week. Okay. Engineered options. Core strategy video, 22 minutes. It's what we do. So I hope that helps. All right. If you haven't had a chance to check those out, watch them today. 20 minutes. Okay. All right. I'm getting an update from the dev team. We should be pushing an update to my pinch point scanner. The upgrade should be coming this morning. Hopefully it happens while we're in session. But at the very least, it will be here by 2 o'clock when I have that session. All right. Very good. Very good. We do. Nope. I mean, trade management wise, what we need is we need price on XSP to get above 684. So it's going to be the day. If XSP can get back to 684, so if we're at 684 or higher, we're going to take a winner in net profits on the day. So we need this right here to continue to shrink, go into positive territory, right? Because right now we're at 683. SPX right here is around 681, almost 682. We only need a couple points today. So if we can get like a 2 point move on XSP to the upside, we're going to be fine. And all that is a defense trade that lets us make profits on the week, right? I could still lose two of my three trades, win one, lose two, and still make money. So that's that line in the sand is the 684 XSP. So if we can get above 684, that'd be great. But that's all I have to do today. So unfortunately, the market just kind of sucked over the weekend to come into Tuesday's trading and be down another, 0.5%. It's reducing, but we need to see if there's a bit of a rally going into today. But 684 is our line in the sand. Okay. The 2 p.m. session is going to be it's going to be aimed around my upgrades for pinch point scanner. So I should be able to get this pushed out this morning. If he pushes out this morning, the dev team, I will show this. I've got a screenshot of it here from yesterday. I think I've got it right here. Yep. So here's an update. I just took one screenshot because the SPY is one of my favorites right now to show like something big's happening. But what you can do liquidity wise is you can scan for just S&P stocks, which is 500 versus 9,500. Okay. You can also scan for S&P stocks that are properly pinched. And in the get sets and the goes, those are much better directional trades. Okay. That means that give the market, 30 to 60 days, you're going to see some direction. That's good. And then direction, you can also scan for the breakups, breakdowns, neutrals, and then the trade ideas. Trade ideas, you can have long options as well as spreads. Okay. So it's a pretty cool update. Like I said, for me, I mean, we've traded, we've had a lot of wins. I mean, we're winning 85% of the pinch point scans. But I will admit, like always scanning for 9,600 stocks is giving us a lot of tickers that I've never traded before, and that's not a bad thing. Okay. Especially when we win, I don't mind, but the liquidity on all those stocks is not quite as awesome as it would be if you're trading a, top 100 NASDAQ or top 500 S&P. Option trading, I want to get in, I want to get out. I want to set my take profits and know that the broker can get that filled versus, well, it's a day before expiration. I guess we're going to make money. On some of those stocks that are very, illiquid or the bid ask is very wide and it's a kind of an unknown. I mean, they still work, but you're going to have to wait a lot longer versus getting filled in. I mean, some of these trades should be knocked out within like 10 to 20 days, not 60 days. I want our profits to get hit, especially if the direction actually does its job, right? The whole point of pinch point scanner is that price is going to give us consolidation, and that consolidation is long enough that it ends up giving us a distribution or an accumulation phase of the market, and those tend to give us breakouts. So we are going to participate in the chop, okay? And we're going to give ourselves enough time that we are likely going to get a directional move. Now, we have it directionally given us a bias based on a real-time momentum, but we also can go either direction and just trade the market. And either way, it's like if you give the market a chance to open up volatility and it does, you're going to get paid. The hard part is if you're, trading in here when it first started, this is what a lot of people do actually. A lot of people, get a ticker, follow it, and the price is it just happens to be right here. Just a random point in time. Here's where price is at. I think for the next 30 days, price can go up. You have no idea. If the technicals are giving us some consolidation patterns, I feel much better about taking a trade in here at the end of consolidation, near the end of consolidation, whether it's, like I said, distribution, which is going to be something that typically goes down, or accumulation where things tend to go up in a breakout phase. What I'm trying to do with the pinch point scanner is we are trading at the end of this consolidation. So if you give me 30 days or 60 days, that's usually plenty of time to see the market give us a directional move. And so when we're trading options in here, it's cheaper. It's much, much cheaper. And then we can get paid, one direction, both directions. There's typically greater than 100% profit opportunities if you just trade a single direction, or we price these out where we have at least a 1-to-1 and we can go both directions. So I can lose one, win one, and get paid about 50% and hit my profit target. So we can lose one, win one, and still make, 50+% return on a risk. That's what I do with all these trades for pinch point scanner. Okay. So like I said, if I get the push this morning, I'll show you, and we will, have a look and dive into it. But I'm gonna showcase this more at 2 p.m. today. The scanner is it's a one-click trading, one-click scanner. It's in your pinch point classroom. Okay, let me refresh this. I'm gonna get out of the classroom, show all. Let's go pinch point scanner. So I'm inside the pinch point scanner classroom. There's my click here thumbnail to access the scanner. There it is. So now we can search by ticker, or my favorite is just go to whatever stocks you want or ETF. So if you want ETFs specifically, SPY. Okay, ETF for the SPY. Right now you see here that the signal is a go zone. There's one. Okay, if we go to any other ETFs, what was I thinking the other day? DIA. The DIA is in a get set. Like these are good. These are indexes that are primed and ready to move. So if you're looking for ETFs, you just search for them. IWM, it's in a get set. So we have Dow in a get set. We have Russell in a get set. We have the S&P in a go. Look at the QQQ. Qs are in get readies. So this is still a little bit early. But if we have get sets and goes, we have great trade ideas. So if I go SPY, click on SPY. Okay, we'll check for the pinch. We're in the go zone for a breakdown. And if I just go into liquidity, S&P, oops. Let's go. So all your S&P stocks. Okay, now you can scan top 100. We got 111 in the S&P that we can scan for. That's, again, top options, right? Top 100. In the NASDAQ, top 100. Direction. You want to filter for direction. I never care about direction. As long as this thing is pinched, I think we have good trades. But what's nice is if I just go all stocks, right now of every stock, almost 9,600 stocks, we have 16 in the go zone. But the one thing that stands out is look at the volume. I mean, obviously the SPY is one of the most liquid instruments in the world. I don't see the SPY in the go zone very often. So something big is coming. I don't see the Dow or the Russell in the get sets very often. These are good. These are good signs. Okay. Now, whether or not the market goes up or down, that's not in our control. The point is, can we trade it? Right. So, for example, I think we have an opportunity over the next 30 to 60 days to see price doing something like this or like this. I don't know what direction. I shouldn't care what direction. What I'm looking for is, can I make a trade that gives us an opportunity to make some money? So here's an example. If I want to trade it both ways, okay, if I put a butterfly spread up here at highs and a butterfly spread perhaps down here or here, these would be dirt cheap butterfly spreads that probably offer, 10 to 1, maybe better. And that way we can capture something if the market does fall. Okay, or we can go take the expected move of the S&P, buy a debit spread, and see if it's cheap enough to trade like the outsides of those moves. I don't want to pay that much money for a debit spread, right? If we trade the SPY or the SPX. So anyway, we're primed for some direction. Today, if futures are down a little bit, we'll see what the market gives us. Let me log into my broker platform here. We got opening bell in 10 minutes. Is there a welcome to the neighborhood flow chart for checklist? So I'm not sure what that question's for, Walter. What are you asking for? I mean, every classroom has intro videos, master classes, core strategy videos, PDF strategy guide, kind of a sequence from start to finish. That's every class. Where do I begin? Well, I mean, if you're here for this daily profit plan, this is a free session. Everybody can jump in and just hang out with us for the morning and chat, right? So what you'll see us do on a daily basis is I'm looking for trades every day in my daily profit play service. That alert goes to members every week. Typically, we do this on Mondays because the market was closed yesterday. We're doing this today. We have an 11:30 live session to get a trade going for waterfall income. Newsbreakers, I will be looking at some earnings this week and see if I can find something good. Double ups is going to be some 0DT flows this week on S&P or QQQ, or I should say S&P and NASDAQ typically. Pinch point upgrade is official. So I'll see if I can find some trades this week. We're going to have a live trading session on Thursday. So we'll have webinar today, probably webinar tomorrow, and then a live classroom, live trading session on Thursday together. And that way we'll be showcasing the new upgrades on the pinch point scanner, find some trades together. Engineered options, I'll have new levels today. Once the market opens, we'll have new levels. Okay. We have a trade that's going to be expiring today. If XSP gets above 684, we've got a winner, a net winner for the week from last week's trades. We'll try to get a new one this week. Project Options Edge, if the VIX is over 20, I'm selling premium. Okay. So, like I said, if you're here for the first time, just be a spectator, just soak it all in. Okay. Just hang out with us. We will be trading, right? We will be trading. So just sit back and enjoy. This is all about process and finding good mechanical trades and following a system. And if you're looking to get started, I would say this is always my favorite place to get people started. If you're new to trading options, one thing I'll say about most of what I'm doing here, these are all option-based services for the most part. The scanner obviously does a lot of the heavy lifting for me. All the other classes are based on option strategies. If you're looking to get started on option trading, this Practical Options Quick Guide is a $27 course to get you started. You want to trade the market up or down? Great place to get started is Practical Options Quick Guide. Okay. If you like the quick guide for $27, I sell this class for $497. Okay. If you are a member, a lifetime member of any of my classes, I will give you the $500 course for free. I'll include it. All right. So that way you can trade with me. You can get a nice little foundation course to go with it. This has 13 of my favorite strategies. And now we can trade the market. So this is just up or down trading with options. The full course is up, down, sideways with options. One Trade Mastery. This is a great video. I'll give this to you right now if you want. This is about a 70-minute video on just talking shop on some options, trading bullish or bearish, and kind of explaining. Okay, we have a trade. We have a technical trade. We look at something on the chart that we like. We want to trade it, let's say bullish, and we have a couple different strategies where we could buy a call option, we could do a debit spread, or we could do a credit spread. And I show you, if we did all these trades, what does price need to do for us to make money? Where's our break even? What's our return on risk? So this session is free. I'll give this to you if you want it. So this is One Trade Mastery. Okay, does that link come in? I've sent this before. That link should work, right? Looks like it's posting the entire link. I think it wouldn't work when I posted on YouTube. Okay, YouTube, it was too long. So that link should work in the Zoom chat. So if you click on that and save that link or bookmark that, that's a 70-minute session, and you can just have it. And if that that helps you understand, or at least get a kind of a boot camp, if you will, of okay, I think options make sense to me. Then maybe you go from this free One Trade Mastery to a quick guide. Trade some more ups and downs, and then if you like that, there's the full course. But like I said, the full course, I will give you the full course included if you're in one of my services as a lifetime member. Okay. So I don't want you to have to double dip. It's like, if you want to trade with me, then, get a service. But these services do not overlap. Okay. These services are set up, and this is by design. They're all different ways to get the job done. So this is based on my win percentage as well as my reward to risk. Daily profit play is we're winning about 89% of our trades. Okay. Our break even is like 80%. So, we need 80 to 81% to make money. We're winning 89%. There's our edge. We take trades almost every single day, and the model portfolio is up like $80,000. This is one of my favorite ways to generate income every single day from the market. Is it perfect and flawless and undefeated? No, we take losses, but like 1 out of 10 times. We've probably had 3 inefficient days in the last like 30 to 40 trading days. So it's still like very much within the statistical distribution of what we expect, which is the market makers should be efficient and the market should stay within these highs and lows, and we exploit that and make money. Okay. Butterfly trade, that's going to be in the Practical Options. Yes, Rob. Yep. Waterfall income, this trade, we're winning about 95% of these trades. I do this trade every week. It's a swing trade on the indexes. Project Options Edge is a discretionary service. I do sell a lot of premium. I do sell a lot of puts. I do a lot of ratio spreads. All that means is I am very, I use capital in Project Options Edge way more than I do on defined risk trading. So I'm willing to sell more naked options to collect the premium. I'm willing to repair my trades and have like a campaign position. So this is how I manage money for my clients. Project Options Edge is very similar to how I'd manage my accounts as far as investing, because I don't want to lose. The nice thing about options is we don't have to lose trades. If I'm assigned a stock, I own it. If I own it, I can repair it. So we don't have to take losses if we work options into our positions. Now, I don't want to get assigned on anything. I hate owning stocks, but when I own them, I know that we can repair them. There are some stocks I don't mind owning, but for the most part, I just want to keep flipping them and making income. Pinch point scanner, Love the upgrades. 85% winners, and we're typically going after. We hit like the auto target for us is I just set the take profit at 50%. 50%. So if I paid, 250 for a debit and I'm trading either direction, I put the credit at 375, knock out the winner, and we make money on the trade. So I can trade up or down, still make money, hit a 50% take profit. That's how we're winning 85% of our trades. Newsbreakers, this is more than 1-to-1. Okay. But we're winning about 71% of our trades in newsbreakers. This is trading earnings, by the way, which truly is a coin flip. So the fact is, earnings is maybe at best like a 50-50, coin flip, and we're turning, 71% winners. So, I mean, this week, if we have bigger movements on, some of these instruments that have earnings today after the close or tomorrow at the open, we can take a look and see if any of these look attractive for a newsbreakers trade. Engineered options. This is 1-to-1 risk reward. And the goal is we have basically a participation level every single week, break even levels, and then some defense. So this week, if my XSP, this is today, if my XSP stays above 684, I will still make money from last week's trades. Okay. I could lose 2, win 1, and still make money. So basically, this is my way to say, look, I believe that the house edge that we play is the market can be break even or better way more than it's not. And our alignments are looking a little iffy right now. I mean, we have price, and truly, this is for engineered options. This is a very skeptical. Like we should not be forcing trades in this environment. Truly. Now, I still am comfortable placing a trade in engineered options because I'm trading XSP. I control my risk, but we should not expect this environment right here to give us something bullish when the alignment needs to be above the 50-day moving average, and it's not. So I will issue the alerts today for engineered options. I will take them live, but we have to understand that if we're taking a trade, that defense trade is probably going to be the most important thing because the market's ability to, fall while it's under the 50 moving average. I mean, if you go from a prices here, you go from a 50 moving average to a 144, guess what? When it breaks below the 50, it typically gravitate towards the outer trend lines. And those outer trend lines are here. So the pressure on this market now that's below the 50-day is down. But if we are going to bounce like we have done here and here, if we bounce again, well, it's the same thing. We haven't broken structure yet. Okay. So I'm going to give it a chance, but I am fully prepared for if the market is not cooperating, I've got to have some defense in there to hopefully carve out a net winner. Okay. Gamma lows for today. Yep, we do. Let me bring up a workspace here. Gamma levels on the day, all roads point to the downside. Now we are going to be opening slightly lower with a gap. That's a tiny little gap to the downside. So, I mean, this is almost embarrassing to see that there's no, I mean, it's all negative gamma right now. Like 68.80, it's so negative. I mean, it just seems like the market's going to try its hardest to, just work its way lower. We said this market is vulnerable. It is vulnerable. Okay. There's not really a lot of support until like, I see support at 65.50. I see on my, gamma flows, I could see something around like 67.50 as far as intraday containment. But I mean, this market does not have a lot of support. And also look at the VIX. You open up this. Okay. VIX is at 2185. I mean, we are getting back up to like a pretty high VIX. All it takes is one more poke to the upside on the VIX, and there's no volatility suppression. This means that the markets are loose to slide lower. Okay. So look, we're just in a environment right now that the markets are pretty vulnerable. And it's as like easy as I can make it is we're opening up here. It's opening bell. And, I mean, if I wanted to fade this, it's like, I don't know what's going to happen today, but I would be comfortable saying, okay, look, let's take a look at the broker. Let's see what the market makers show. Can we sell calls above that? Because I think that we possibly can. So let's jump into the broker platform here. Let's see what the expected move was. By the way, did anybody catch a pre-market Sorry, I didn't have a chance to go pre-market SPX. What's our current plus minus on the day? Okay. For engineered options, 55.49. Okay. So I'm going to go, this is Tuesday, 55.49, 52 on Thinkorswim, pre-market 67.98. All right. Now it's showing like 50 something, right? So it's been adjusted. Okay, let's go SPX. Okay, so I'm showing Feb 17, a plus or minus 46. Pre-market, I want to know like 67, 67, 68. That's good. I want to keep that number in mind. And we'll go pre-market. Now, if I just look at a call spread today, okay, and again, just to be safe, it's like a call, and there's no guarantee. Like, look, a call spread could still get in trouble, right? If we go all the way back up here to 68, 80, that is positive, negative gamma. Could the market try for that today? Sure. But guess what? If we get to 687 today, our XSP is going to be over 684, which means we still win on engineered options. Okay, but let's see. So right now, let's see what I just need to know that am I selling premium above 68.80? If so, I feel a lot better about that. 6,900 to be a pretty outsized move. So right now, I've got the 68.80 to 15 delta. Let's look at if I could pull in enough premium on the like 95 and 05, that's a buck. That's not a bad trade. Let me see here. What's a broken wing? If I go 90, 69, dang it. Yeah, that trade, you just need price to threaten that trade. If I just do a call spread, 6,900, 69.10, that's a 10 delta. All right. Can I get this one filled for, so let's go 10 delta. There should be a bit more skew in the market for the put side, 67.35. Gamma's, yeah, that's way below that. Let's see if we can get something 67.35 as a 10 delta here. All right, I'm going to take this trade for a buck 50, hopefully. Come on. I'm going for $1.40 to $1.50 fill on a 10 wide. Just got filled for $1.40. All right. Alerts coming in for daily profit play. I'm going 10 wide, 6,900, 69.10. Get down, bro. Here. All right. Trailers coming in. New trade. SPX 217 expiration. $1.40 credit filled. Okay. So filled for a buck 40. I'm doing pretty low deltas here. And then now I'm going to build out. Let's go buy, sell, and skip. Okay, if this can get filled for $1, that's a $10 wide profit trap on a broken wing for $1 credit. This is not filling. It's only going to show like 5 or 10 cents debit, but I'm going to put this in as $1 credit as a defense trade. And then down here, same thing, 30, 20, and 05. See if this will fill for $1. These are outsized moves, by the way. So just based on market efficiency, these numbers shouldn't be tested or at least having price close below them. But I'm going to try to get some defense in here, in between my strikes. All right, so those defense trades are going in. Pending defense trades. So that's a buy. $1 credit. Okay, so that is max risk $4, but max profit would be up to $11. And then on the put side, 67.30, 67.20, and 67.05. Okay, defense trades are in and pending. Defense trades can stay as is. Current daily profit play, we will keep an eye on this one to manage. Right now, XSP for engineered options. There's my 683, 684. It's still showing profit. Okay. Right now, it's like the 690, 691 is not in profit. The 684, 683 could show full profit. This would be worth $200 at the end of the day. If we're above 684, this could be worth $200. That's enough to cover the cost of these trades here. Okay. So I don't need to manage these trades outside of if we're above 684, hopefully this one's enough to cover the risk. If I wanted to close these out, for the day and be break even, a break even result's actually a pretty good win if you ask me. The market's been down all week, right? So I'd say if we can muster up a break even or better, that'd be a good thing. Okay. All right. High low, we have to respect where the VIX is at. Intraday VIX is going down. So you can see here the VIX is going down. Let's set a chart alarm here at 22.7. So 22.7, that gives us a pretty extreme move. 22.7. We're looking at like a 1.42% move is maybe our higher extreme. So let's go DPP workspace here. This one. Okay. So 1.42%. Let's play around with the gaps here. We had a slight gap down this morning. So gap down. Again, the bottom, calling the bottom is difficult if the VIX is going higher, but if we cap the VIX around this morning's move around 22, that's 22.71. Should be about a 1.42% move. 1.42 puts us around like a 67.20. So that's a 21.72 VIX. And then the high side, we'll take the previous day's close, which would be right here at the end of the day, go up 1.42%, 69.32. Let's go 35, 21.72 VIX. So that should be our kind of high and low extreme of the day, right? The levels that I need price to stay between, I got filled at a 6,900. So 6,900, I'd like to see price stay below this line. And 67.35 would be needed to stay above this line. So for my trade today for daily profit play, if price stays below the screen line, above the screen line, we've got profit. Okay. If the market musters up a bit of a rally, there is a pretty nice inefficiency here from last week, Thursday, when the market slid all day. Yep, you're right. Thank you. It's 69.30. Yep, that's the defense trade. Thank you. So 69.05, 69.15, 69.30 on the defense trade, as well as 67.30, 67.20, 67.05. It's updated now in the Telegram. Good stuff. Yep. Okay. All right. We'll keep an eye on this. I'm going to set a chart alarm at gamma wise this morning, like 68.80. If we test this level, you can see there's highs, there's resistance. Do we come back and poke the gamma pivot? I mean, I'm 20 points above that, so hopefully we're safe. But let's see if this level gets tested today. 68.80. Okay, as well as 6,900. And then we've got some defense there if we need it. Market's not done yet. The day isn't done. This could also be just a noisy day too. We could go up a little bit, chop around. This is the larger gamma pull. So if the market's going to slide towards these directional levels, then that's what we'd like to see in real time, I guess. Not that I want to see the market go down, but another look at this for real time gamma. I'll show you. I'll build it out. I'll build it out in option strat. Okay, here's my real time gamma for SPX. So pre market, biggest gamma level kind of sticks around like 68.40 to 68.20. Real time, it's kind of the same. So I'm not getting the big downward flows here towards like 67.60 and 67.70. I'm not getting that in real time. So real time, things have adjusted a little bit where things are a bit more contained around the 6,800 zone. Now we could still fall to 6,800 and this could light up, this could light up a little bit more in real time. Perhaps, down here, if this starts to turn south, then we're going to see some more gamma pressure to the downside. Anything below 68.80, it's easier for the market to be selling off. So the target today would be if the bulls can push this thing up towards 68.80, that will kind of neutralize the negative gamma. That's a good sign for the market to kind of slow down and stay pretty efficient. Okay, nice fill there, Dave. Good fill. All right, somebody's asking about the defense trade. We'll keep an eye on this one. Let me label my daily profit play today. So SPX 1, 2, 3, 4. This is today's DPP. There we go. Engineered options. Let me put a quick telegram out for engineered options. $217 expiration trades. XSP greater than 684 is important today to see if we can carve out a net winner from last week's positions for this week's trades. S&P is trading below the 50-day moving average. Okay. Here is option strat. I'll build out some defense here. So I'm just going to customize this. I'm going to build out my daily profit play. This is SPX for today. What do we do? 6,900. So 69 by 69.10. And then 67, 67.35 by 25. Okay. So right now, sell, buy, sell, buy. Why is this showing a debit? I have no idea. That's weird. Huh. This should be this is crazy. Let me build this out somewhere else. I don't know why options set. Probably because they can't adjust the debit or credit. Let's try something else. Okay, let's build it out here. Okay, So I'm gonna add in all the trades. Okay. We're gonna go. This is for today's daily profit play. So I'm doing the 69. I'll do calls on the top. So I'm doing 6,900. And then 6,910. And then for the puts, we did the 35. So 35 by 25 puts. All right. So that is our trade. That's about right. $1.40 is what we got filled on. So we're risking 860 to make $1.40. This is real-time price right in the middle. So we have this, we have this. The purple lines, by the way, on this chart, this is my dynamic trend software. The purple line is a one standard deviation move. One standard deviation move. Okay. So we are outside of that, which means we are closer to like a 1.5 to 2 times move, which should cover about 93+% of our trades. So we got a pretty good probability. Plus, I used the 10 delta this morning. So what that means is we have about a 90% chance of profit on that trade for today. If the markets just do their job, efficiencies, they stick around for the day. If price just hangs out here, then we should be okay. Okay. So that is my, iron condor on my daily profit play. I just need price to stay somewhat range bound for the day and stay within one standard deviation. That's it. If the market can do that today, we're in profit. Okay. The defense trades that I'm adding to this. So I'm going to take a screenshot of this. And then I will add to this. Let me see if I can edit this and add more. I think it maxes me out here. So 1, 2, 3, 4. I can do at least one defense trade. So I'll try this. So I'll add the call defense, which is 69.05. So buy the 69.05. That's a call. And the 15 and the 30. This is a 1-2-1. What the heck? Buy. Oh, okay. Hang on. I just bought. This needs to be a sell trade. Sorry. This needs to be a sell. There we go. This looked very different. Okay. So why is this tiny little profit trap? This tiny little profit trap because if it's assuming that I'm taking the trade right now at this tiny little debit. Okay. I am taking this trade at $1 credit, and it hasn't been filled yet, but this is a up to an $1,100 profit trap. So it should look something like this. So I still have risk, and I'm tacking on a bit more risk if I'm wrong, but price would have to be greater than 69.30. Yeah, price would have to be greater than 69.30. 69.30 for me to take a full loss. And, before we get to 69.30, there's a profit trap there. That would be break-even price of 6,926. Okay. So what this should look like is we have our daily profit play here. That's worth $140. I then have a credit to add to that for another $1 and a profit trap that's worth $10. And the same thing on the downside. I have my $1 credit, I have my profit trap, and my risk. So I have hopefully another $1 credit here, another $10 profit trap here. Okay, like last week. Again, we've talked about this before in all these butterfly things. This is a broken wing butterfly. It's a defense trade. All that helps me do is if price stays right here for the day, it doesn't cost me anything to play defense. That's why I like this defense strategy, because if I get filled on this, I'm actually pulling in a credit, okay? And I have a profit trap opportunity that gives me a bigger buffer. That price would have to do something very, very out of the ordinary. It'd have to go excessively long or excessively short in order for my trade to be kind of threatened. Okay. It says out of range. I mean, I don't know why it does that. Like if you add the strikes and build out the ticket, you should be able to take the trade. So if you're using Schwab, look, go to Thinkorswim. Thinkorswim web on Schwab. You could build this trade out right now. I'm going to log into Thinkorswim right here. Okay. So if I go Thinkorswim web, this is a Schwab account. $ SPX or SPX ticker. Look at the option chain. Today's the 17th. Let's find our strikes. So I'm going 69. This is the defense trade. I'd be buying the 69.05 call, selling the 15, and buying the 30. This is a 1, sell 2, buy 1. You put this in for $1, good till canceled. This needs to be in for $1 debit. There. So if you type it in, this is through Thinkorswim platform. If you type it in as -$1, that should show up as a credit. And I would go -$1, so it shows up as a credit, good till canceled. That's the trade. There's no issue there. Right? This is a 0 DTE trade. Buy, sell, buy. And I've got my pin price is 69.15. My profit trap is perfect at 69.15. My break-even price is 69.26. Okay, where did we open this morning? We opened this morning at opening bell was around 68.19. We'd have to have a 100-point move today for this trade to be in trouble. I mean, again, it's like it's out of the efficiency zone. It still happen. Obviously, it can happen, but it's out of the efficiency zone. Okay, it's in Telegram. I put the defense trades in Telegram, daily profit plays in Telegram. It's in there for members. Okay, there's my 6,800. There's my gamma. Here's my gamma. Okay, notice how this is updating in real time. Right now, it looks like it is attractive enough to see prices here, maybe finding support around 67, 67.75 to 67.60. That could be looking for some support. Okay, we are in negative gamma below 68.80. We said that this morning. So this market, tiny little rally, and we are sliding lower. Now our strikes are threatened at 67.35. So price is going to fall all the way down here through all this gamma support past 100% ATR. Then we've got some risk on the day. But hopefully we still see the markets kind of contain itself. That would be good. That makes sense? So I certainly don't want to see prices like falling dramatically below 67.60. Could have happened, sure. But hopefully if, defense kicks in, it'll help. Otherwise, if the market just kind of hangs out here, equal lows, maybe 6,800 can hold. It's like a lot of stuff happens in a 0 DT environment. Like literally from start to finish, the trade opens, closes, and we do our best to manage everything for a win. Profit taking goal. I mean, yeah, I do. I mean, for $1.40, if I can show, I mean, if I'm showing like $60 or $80 on that $1.40, I'd be pretty happy with that. Especially in a kind of ugly, volatile day, I'd be happy with that. Okay, VIX is creeping up here. It's like, are we going to break the VIX and go up again? It's very possible, right? Very possible. All right, very quickly on SPY. This should be pretty cheap to trade. Should be pretty cheap to trade because it's liquid. Now, if you don't want the assignment risk, we should probably focus on SPX. But I'm using my pinch point. SPY is showing some direction, right? This is in a go zone, which means we're going to have some direction coming sooner than later. So what I want to look at is SPY. and SPX, but this one's probably going out to maybe the end of the month or maybe into the March expiration. So this is out 30 days. I think that's fair for a pinch point trade, is going out about 30 to 45 days. Okay. So what would it cost us to go to like the March, let's go March 31st, end of the quarter, SPY trade, expected move, we could be down as far as like 650, 645 zone, or up back to, all-time highs. Maybe. Just some thoughts. Could I do 650, 45, and 60? Something like this, where I do a butterfly spread. $1.25 to make me up to $10. Oops, that's wrong. So there, it's cheaper. So holy crap, that's cheap. 20 cents to make $500. That's a pretty cheap trade. If I went 10 wide and 10 wide, cost me, that's insane. It cost me 40 cents to make up to $1,000. Now, the perfect trade is this would have to be inside the butterfly trap as we get near expiration, which is out into March. So if we see the market flush down now, this trade is not going to be as good. Because if we flush down and then we bounce, we're not going to see a lot of profit on this butterfly trade because we're out 30 to 45 days. Okay. One thing I could look at here, let's see. If we're going lower, I kind of looked at this yesterday. Let me see something here. Basically, how low could we get the risk? Let's go out to the end of, I'm just curious what the end of February looks like February or March 2nd. Right now on SPX. Could I do let's go end of February or March 2nd. We're trading at 67.90. All I want to do is make this the tightest possible risk for a bear call spread. So if I did, let's say 6,500 by 6,800, that's 300 wide. God, that's so expensive. 300 wide, it's like I want this thing to fill for like 295. I want to risk $500 to make up to like 20 grand. I'm gonna do this trade. I'm gonna set the credit. Okay, I'm gonna set the credit. This is going out to the first week of March. How does this thing get filled? Price would have to come back to like probably 6,850 to 6,900. Let's see, where's this rally? Highs around 16. It's like, are we going to get up there again? It just seems so vulnerable to the downside. All right, here's what I'm going to do. I'm going to set this trade for a 296 credit. Let me walk you through this trade. From 6,500 to 6,800, that's 300 wide. Agree? Everybody see that? So 6,500 to 6,800 is 300 points wide. What I'm trying to do on this trade is get filled for 296. If I get filled at a 296 credit, that means I'm risking $4 to make up to $296, which is I'm risking 400 to make $29,600. Now, is this trade going to get filled? Probably not without a rally up above. We'd have to rally probably to 6,850 to 6,900 for this trade to get filled. But if it gets filled, my risk is defined and there's no assignment risk. And basically by the first part of March, are we going to, be lower than 6,800? Because if we are, then every 5 points here, that's $500 a profit. Okay. So I don't know if this is going to get filled, but this is a really good defense trade. This is a really good hedge. So I'm going to take my chances with a $400 risk and, see if we get filled. Now, if price gets a pop to 6,850, 6,900, I'm going to keep it open. I'm comfortable risking that. Okay. So 296. This is out to March 2nd, by the way. So this is just kind of taken into consideration this month. Hard timing. I mean, a lot has to happen. I mean, this is only 13 days away. A lot has to happen in 13 days. I'm just thinking out loud here. Is that enough time? Should we go out to like the March expiration? I mean, maybe, probably, but it's cheap. I'm gonna take it. I'm gonna take a stab at it. Let's go out. Let's go out one more week. Let's go out one more week. March 2nd. Let's go to the 9th. What is that for? Is that a Friday? March 9th is a Monday. So the 6th or the 13th? Hmm. I'll try the 6th, 13th. I mean, at this point, you might as well go out to something in March. I don't know if this is going to get filled. I will go. I'll try this March 31st. I'm just going to go end of quarter. 65 by 68, 296. I would adjust this if this is trading at 293, 294, 295. I'll probably adjust this, but I'm going to take this. So my risk is only $400 to make up to like $22,000. Well, sorry, I can make up to $29,000, $29,600. I'm going to put this trade in. So this is a trade that's just pending. It's defense. Maybe it works, maybe it doesn't, but this is out to the end of the quarter. Okay, where are we at for today? Market seems to be holding around this 67.90 zone for right now. You know, flirting with these lows. Are we going to rally back into this morning's sell-off? Maybe. Plus or minus on the day. Remember, we talked about 68 points. What'd the market do already? Let's go down to a 5-minute chart here. What did the market do this morning? We've already sold off. We opened slightly lower. Market's fallen about 37 points. Okay. VIX is right back up towards the intraday highs. Let me set a chart alarm here at 24. I want to see if the VIX is going to go higher today. 24 and 25. That does not make for a fun time if the VIX is going to continue to go up for the day. We've seen a lot of these intraday VIX rallies, and that has not been fun. But obviously, we have to deal with it. Is it a debit trade? No, Rommel. It's a credit spread. Okay, so that trade that I just built, I'll show you. SPX. I went out to the end of March, and it's just going to be a bear call spread. So I'm doing a bear call spread. I am selling the 6,500 and buying the 6,800. So right now, it shows that I can risk, $7,000 to make $22,000. But if I put the trade in for 296 credit, right now, see how it says the net credit is like 2281? So it says 2228.10 is the current price. I'm setting it at 296. So here's a way to think about this. I have a 300 wide credit spread, and I want a 296 credit entry. That's $4 max risk for 296 max profit. Okay. So I will determine what my reward and risk is on that trade, but it would be a credit spread. That way my risk is $400. And for every, and here's how it works out. If this trade gets filled, we probably need price to pop back up above 6,800. If price gets to 6,850, maybe even 6,900, maybe even pokes 7,000 again and then rolls back over. If we get below 6,800, I mean, if we get filled on the trade, I know I'm risking $400. Okay. So I can risk 400 to make 29,600. I will take that trade. Now, how do I get paid in this trade? Well, for every, let's say 5 points, 5 points, 5 points, 5 points, 5 points, every 5 points is $500. And where am I capped? Well, if price is less than 6,500 by expiration, then I'm getting full profit on this thing. But let's say that we are at to like 6,700. If we're at 6,700 by expiration, we're still up $10,000, which is not bad because that is a 100-point move. Is that right? Is that's 300? Yeah, we should be up 10,000 bucks. So it'd be 100 points at $100 per point. Yeah, 10,000 bucks. So, I mean, if we just get down to 6,700, 6,600, support that I've seen at 6,650, it could work. But to get the trade filled, we probably need price to go back to 6,800 plus. Needs to get to 6,850, maybe even poke 6,900 and then fail. So it might be a trade we put in that doesn't fill. If price slides lower and stays lower, it might not fill. Yep, it says that because the broker is offering about 20 it's offering about $228 of credit right now. 228 credit is showing why you have so much risk on the trade. If you put the trade in as a pending at 296 credit, if you put it in at 296, that's not your trade, that's not your risk. You put this trade in at 296, this max loss becomes $400. This max credit becomes 296. Watch it in the broker platform. See this? Max loss 400, max profit 29.6. If you put it into 296 credit good till canceled, that's my max risk, that's my max profit. No cash, no assignment risk, cash settled. We'll see what happens. So it's a credit spread, pending order. And what does price need to do for this thing to win? Well, it needs to go up first for us to get filled. That's the first part. Is if price rallies up and we get filled to this trade, I'm risking $4. Okay. So if price rallies and that rally is faded and we start to break down again, that's where we're going to start making some money. Okay. I'll post it right here. So this is a, bonus hedge trade, SPX 331 expiration, sell the 6,500 call, buy the 6,800 call. I'm doing it for a 296 credit, pending, good till canceled. There. Post it in the chat for everybody. Okay. All right. By the way, I'm posting the One Trade Mastery, video that I have here. I'm going to post this video inside of everybody's classroom. If you're a member of any of these services, I'm just going to post that official video inside the classroom as One Trade Mastery. So I'll just post a thumbnail. It's a 70-minute session. I obviously post it here if anybody wants it. So just some good foundational stuff. But I thought it'd be easier if I also post it in your classrooms too for some bonus stuff. Different dates on pending call spread, March 31st. Is that a question, Ryan? So March 31st, selling the 6,500 call, buying the 6,800 call, pending order at 296. That's the trade. I posted in the chat, 331 expiration, sell the 65 call, buy the 6,800 call, 296 credit, pending, good till canceled. Yeah, I'm just going the end of March. I mean, I wanted to go like March 2nd because I was like, well, maybe, but I don't know. It's like, I think we just have to give ourselves a window. If the market keeps doing what it's been doing, which is it pokes the lows and rallies, maybe pokes the lows and rallies. It's like, I mean, this could take time to finally nudge lower. So, I mean, would it surprise anybody if the market does this first? Market rallies first and then fades after? That wouldn't surprise me. So I don't want the expiration to be too tight because we could take a great trade, time it wrong, and still lose. So I'm just going to go out a little bit further on the trade, which might make it harder to get filled, but I'll take my chances. So, it's a good reward to risk. It's a fantastic reward to risk. But what we need price to do is kind of cooperate and, see if we can rally first, get that fill. I think if price rallies to like 6,900, it might be close. If price gets to 6,900, maybe even 7,000, it'd be close. But, again, there is risk. It's certainly not a guaranteed win. You're asking for the market to go down. But if we get a rally off the 100-day moving average and this gets filled and this is a fade the rally, I think we're in good shape for that trade to give us some profit. Okay. Yeah, Dave, I'll look at those and get those posted. Right now, I want to see if, XSP is not looking great for a 683. Let me pull up my workspace here for engineered options. All right. So keep in mind, look at our alignments here. Are we in a good space for an alignment today? Look at my 1 hour. We're in a bear zone on the 1 hour. On the 4 hour, we are crossing over prices below both my 50 and 144. Like, this is not a good engineered options environment. Okay. Now, if your question is, well, should we short the market? No, it doesn't pay well enough to short the market on a regular basis. Okay. Like, over the course of 10 years, if you shorted the market, even with good alignments, your win rate's like 53%. If you stay long the market, even through bull and bear markets, your win rate's up to like 58 to 60%, even through bear markets. Okay. And these are trades that only last a week. So if I take the trade, one thing we could do is see, like, does the market carve out a positive trade? I said this in Telegram for engineered options. This is a garbage alignment today. If we lose at the 684, like my defense trade loses, it's fine. It sucks. It's a week that slid all week. We wouldn't have had a winner. So I'm going to take my chances and still post the trades, play defense like I typically do. Let's see if we can get, now that we opened here, can we get back to where the week started at like 682? I can try that. So I'm going to get these for engineered options. This is where we started. We're down a couple. This is in the money, so this could be a participation trade. I'm going to go 682, 682 put, 681 put for 50 cents credit. Okay. And then we opened here. That's essentially acting as our break-even trade. All right. I'm going to try that one for 50 cents. And then my defense is going to be down here around 674. And then my other defense trade is going to be down here at 667. Okay. So again, understand the risk if I'm doing these for engineered options. This one's going to be a 1 contract. This is going to be a 2 contract. This is going to be a 4 contract. Okay. That's how I'm going to participate in engineered options. Now, I know that I'm taking these trades with poor alignments. Poor alignments. We are in a 1 hour bearish zone. Price is on the 4 hour chart below my moving averages, and price on the daily is also, at my 100, which is prices below the 50-day. Okay. So, really, I'm ignoring the technicals and I'm taking the stab, because if this market flushes for the week and bounces, we still have a chance to win. And that's what I'm going to play, is my chance to maybe get a bounce off of like an extreme move. Okay. Could it backfire and could we take losses? Yep. Totally. So I have to embrace that risk. And I do. Okay. All right. So these are going to be my trades for engineered options. I'll get these in. Let me post this for alerts right now. So this is going to be XSP. We're going to go 224 expiration. Okay. That way I can just copy and paste this in Telegram. Okay. Note, alignments are not bullish, but I'm choosing to participate. See if the market, after sliding lower last week, and perhaps again this week, will find a key support level to bounce. Okay. So XSP 224 restoration, 682 by 681 for one contract, 74 by 73 for two contracts, and 667, 66 for four contracts posted. What is Monday? Oh, you're right. You're right. 223. Yeah, I was just going 7 days. I forgot it's 223. You're right. Sorry. 223. Yep. So we'll go out to Monday. Thank you for that. I forgot it was President's Day yesterday. So 223, 223, 223. All right. Now we get these trades in. 223, 682. These are bull put spreads. So I'm going 682, 681 for 50 cents. And then 74 by 73 for 50 cents with two contracts. And 667 and 66 for four with 50 cents. Pending, pending, pending. And now I just wait. What is the max loss on the hedge spread? Are you talking about that 6,500 by 6,800? If you take the trade pending at 296, which is not filled yet, this trade for 296, max risk is $400. Today's the 17th. All right, putting this in engine options tracker right now. 223 expiration. Almost there. In the tracker. 50, 50, and 50. Okay, and then a 1, 2, and 4 contracts. Again, if that's not making sense, please watch the core strategy video and engine options on how I'm playing defense with these trades. Okay. Prices today. I mean, that's an encouraging sign. Our XSP, I mean, who knows? Let me set it. Let me set a chart alarm XSP at 684. That's where we need it to be today. Set a chart alarm here, 684. If we can poke that or get above it, that's an intraday high. So if we try to get back to the intraday high, all right. Trade one just got filled, actually. Cool. So this trade is now filled. All right. So for engineered options, this trade just filled for 50 cents. This trade pending. This trade pending. So we got some skin in the game. All right. I'll set a chart on there at 684. If the market can somehow try to find a way to get back to these highs on the day, this is a delayed feed, but I'll keep an eye on this one. Going here. VIX is still at 22. All right. I think I'm going to take another trade on the SPY. I'm just going to do a wide credit spread so I don't want to do a bunch of naked puts. So I'll do a wide credit spread. SPY. I know the lows in April are 480. The SPYs don't go less than that. What the hell? That's lame. December 18th. How low can I go? Maybe I go out to January. There we go. Let's try a 480 by 430. I'm going to take this trade. This is another income trade. So it's defined risk. I can keep the buying power within about $4,700, but I'm going to try to grab. It's not a bad return. Like grabbing $255 on this trade. Probability of profit's 93%. VIX is high. I guess I'll try to go lower. Maybe we go 475. Maybe 465, 415. I mean, if I can grab $200, I'm pretty happy with the trade. It's just an income trade. 460, 410. Yeah, let me grab this for like 215. This is just an income trade. I'm doing this for Project Options Edge. This is defined risk, so it should tie up way less capital. But I'm going to try to throw this in for 215. I can do this on every account. So little income trade. 215 getting filled. This is Project Options Edge coming in hot. Let's go next. That way it caps some of the bleed. If the market's down, we're trading a very low delta with this trade, so it should cap the defined risk move. My drawdowns. I mean, the market have to absolutely tank for me to take on like a $4,700 drawdown. It's a little stiff there. 5627. Okay. All right, I'll get these in the accounts. I'll put this in for Project Options Edge. Just hang with me here for another couple of minutes and I'll get this posted in Telegram. So I'm getting 215 to 216 credit on that trade. I also would be willing to own the shares. I'm just taking this now to keep my risk defined, but I would be willing to own at least 100 shares. Okay, I'd own at least 100 shares of the SPY. I'm always willing to own like the Q SPYs. I'm always willing to take a tranche of like 100 shares, 200 shares, and repair it or keep it. That's not a bad trade if you can start 35 to 40% lower. Okay. Nice fill there, Pete. 239. Great, man. Okay. Project options edge. New trade. This is trade number 108. SPY. Going to 115.27 expiration. Selling the 460 put. Buying the 410 put. 215 credit. Filled. This is a defined risk wide bull put spread. Probability of profit around 93% with current VIX greater than 22. Which we should, I mean, even if the VIX flares to 30 or 35 or 40, we shouldn't see the market drop 35%. So the VIX obviously reverts and it retreats, and we just need to figure out whether this market's going to try to push the VIX higher, 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 or the VIX is kind of going to stay like this, like 20 something, and then fall back into like the 17, 16s again. But we've had elevated VIX these last couple of weeks, and it's been difficult for like intraday swings or intraday trading because we've had much more volatility. Still efficient. I mean, most of our days have been efficient, but like Larry pointed out last week, we had like 3 of 8. You just have to look back further to see that sample size is actually it's 3 inefficient days of like 30. But the fact that 3 of 8 is just the VIX has been it's been a roller coaster ride. The VIX is, up to 22, down to 17, up to 23, down to 16, up to 21, down to 18. Like that's a lot of craziness going on. Okay, so I'll add that trade in. That's trade number 108. Sell the 460 put, buy the 410 put, collected 215 credit. All right. So it's in the tracker, it's in Telegram, trades in. What do we do with last week's daily profit play? Why are you in trades from last week's daily profit play? Are you talking about engineered options, Rick? What daily? We didn't do a daily profit play for today's expiration. Are you talking about the one where I put it at the expected move for like 250, risk in 250? Or $3 to make $3 to risk 2? That trade? Yeah, I'm not sure what trade you're talking about. Yeah, engineered options is what I thought. Yeah, we just have to ride it out. I mean, if engineered options, look, if XSP is not greater than 684, I'm going to take losses from last week's trades. So I'll be down to $550. Like, do I like it? No. Do I tolerate it? Sure. I have no choice. There's nothing for me to do. You know, do I save myself 5 cents of risk by closing out right now? I don't care. Just give me a trade. So if price can rally on XSP, which is a defense level, if it rallies, let's say above, I mean, at this point, I still have a pending order. I think I've got a pending order for a defense trade that expires today. I don't know if it's going to get there, but let me see something. XSP working. So I still have a defense trade that's a 678, 677 that's trading for about 36 cents. If we get a flush lower today and this gets filled and bounces and stays above 678, I'll do the math. I would be down 50 and then down 100, down 200, and then plus 200. So if somehow this final defense trade gets filled today and we stay above 678, I could reduce my risk to less than, I guess my loss would be $150 versus 550. That's not the worst case scenario. Could be worse, right? Minus 50, minus 100, minus 200. And if I can win 200, I cut my risk down to 150. That's not bad for the market to be down 3%. I'm only lost 150 bucks. But this hasn't filled yet. Right here. This is a 678 by 677. It hasn't filled yet. It's trading for like 40 cents right now. It's close. We'll see. But if it doesn't fill, then I'm eating the $300 loss this week from last week's engineered options. And that's part of it. Like I said, the alignments are getting a little slippery, and they are. But I'm still going to keep trading. Okay. This is why. Look, the nice part is I'm going to battle this thing. Like, I'm going to battle this freaking market this year, and we're going to win. We're going to come out positive. Engineered options, we can be a lot more aggressive when this market is done. Like, when this market needs its cleanse and it needs its pullback and it gives us a pullback here, we can be more aggressive. When it pulls back here, if it pulls back here, we can be more aggressive. That to me is an easier trade. Right now, in this 12-week dumpster fire of chop, that's not an easy environment to trade. The fact that we made money in here is actually pretty impressive. So what's happening? Well, if structure breaks and it heads lower, I'm still gonna fight. I'm gonna plan on like the break even house edge. We get close to a 60% house edge by still participating in the market every single week. I'm gonna bank on that. That's why I stack up those trades. Steven, I'm not even sure what you're asking there. 310, 170. What are your strikes, man? Tell me what strikes you're using, and the math makes sense. If you sell a 6,500 call, buy a 6,800 call, that's 300 wide. That for 296. Yeah, I want that trade. Right? I want that trade. I'm risking 400 bucks to make almost $30,000. I love that trade, but I need to get it filled first. Okay. So engineered options. What do we need to have happen today? Here's the chat. Engineered options here. Okay. XSP 684. Important level today, so we can carve out a net winner. I'll even add in, let's see here for a net winner. We still have a XSP 217 expiration, 678. Sell put by 677 buy put for 50 cents. Defense trade that if filled and wins, reduces net risk for the week. Okay, like the trade's not done. But if price can rally today, if we get back to 684, we win. We actually make money. Is it going to be a hard thing today to maybe? I don't know. I mean, the market looks down, but it's a big indecision candle. So if the market, stays indecisive for today and then rallies tomorrow, well, I had the wrong expiration. I followed my plan. I didn't do anything wrong. Market didn't cooperate. It's okay. But if we rally today to get above 684, we can actually carve out a winner and still make money this week. This is a delayed feed. So my live feed on XSP is 677. We need this thing to rally hard, which I don't know if it's going to. I mean, SPX is down to some fresh lows on the day. My defense trade hasn't kicked in yet. We've got some gamma levels around that 67, 75 to 50 zone. Here's what it looks like. So our daily profit play still looks pretty safe for the day. So, I mean, most of the gamma support is sitting around 67.70 to 67.50. If the VIX isn't bursting higher, market makers could still kind of hang out here for the day, and we might pull a full profit for daily profit play for $1.40. That's a great winner. When the market is down and the VIX is at 20, you can still make 140 bucks. That's a good trade, right? Okay. So, Steven, are you good on that trade? like you get the strikes, right? 6,500 by 6,800 bear call spread. Uh, Larry 68.85. So you went a little bit tighter on the call side. 245. Want the full winner. Nice. Yeah, that'd be a big winner, Larry. Cool. All right. Let me see here. Can we get something? I'm going to look at another. I mean, daily profit play seems to be a pretty solid strategy for today. Not DPP, SPX for the 17th. Let's have a look for the day. All right. Put side. Could I go down to another 10 delta here and maybe shift this up where it's like, I don't think we're coming up to 6,900 today, but if we go 80, can this fill for another buck? I'm going to take this trade for another. I'm going to do another 10 wide here. Maybe go 15 wide call side. Make sure this doesn't overlap. All right, give me $1 on this trade. Or let me move this down. $1.15. All right, I'm trying to go to buck 20. Buck 15. Okay, taking another trade for daily profit play. I don't want to make this one an official alert because I'm taking bigger risk. If you want it, you can have it. I'm going to do the 68.80 by 68.95. That's a 15 wide call spread, and a 6,700 by 66.85. That's a 15 wide put spread. I got $1.15 on that trade. So hopefully, and in addition to that, I'm going to put another defense trade in too. So if I buy, this is where things get a little wild here. If I buy, see if this will fill for a buck. And if I buy, sell, that overlaps. If I buy, sell there. Maybe another defense trade for $1. Okay. So I have another strike in here at 6,700. And another strike down here at 68.80. There. So if by the end of today, price can hold above this green line, hold above this green line, I have $1.40 and $1.15. Hopefully that will hold for the day. So that's, 255 that I can manage. If 255 is my max profit potential and I can trade this for less than, like a 50-cent debit on the day, I'm pretty happy with that for the day overall. Okay, I'll throw it in the daily profit play. This is totally optional. But for members, this is a optional higher risk DPP add-on. 217 expiration. Selling the 6,700 put. Buying the 66.85 put. Selling the 68.80. And buying the 68.95. So 15 wide, $1.15 credit. Build. An additional low delta DPP for the day. All right, that's in the chat for members. Okay. Set a chart alarm here. Set a chart alarm down here. I'm definitely more worried about like the leak to the downside. VIX is just creeping a little bit higher. Let's see where our percentage movement would be. We called like the VIX low around like 67.20. We opened here. That's a 1.2% move. There's a 1.7% move. I mean, so I've got a good defense trade kind of sitting at this put level at the 67.35. Hopefully, if that defense gets filled and kicks in, that can help us, like survive the day. I certainly don't want to see price get really, really ugly to the downside. It's in the members telegram. So this is my day. Really quickly, we had like a plus minus 68. So I'll put another line in here. So we opened up, let me do the math. So we opened up here, we go 68 points. Market maker efficiencies should be about right there I'm going to go blue line for market maker efficiency. So we opened there, and we take the previous day's close and we go up 68. All right. So for the market maker move, we need pricing. Again, this is whether the market is going to be classified by the end of the day as efficient or inefficient. If the market stays above this blue line and stays below this blue line, the MMM means that the expected move was greater than the actual, which is an efficient day. That means that the implied volatility was greater than the actual price movement, which is a good thing. Okay. If it is beyond the blue line, then the market maker move, that's supposed to be MMM. So the market maker move or the expected move, the actual turns out that it was greater than the expected, which is rare, but it does happen. So this would be an inefficient day if prices are down here and they stay down here. But if price falls to this blue area and then bounces, that's showing that the market makers actually care about that initial calculation this morning. And we see that happen a lot. Okay, so we'll keep an eye on this for today. Randy says, did the 68.55, 6,700 5 wide filled for a buck earlier? Good. That's a really good trade. So risking 4 to make 1. I like that trade a lot, actually. You're certainly lower on the call side, but obviously that's looking pretty good right now. Okay. So I will get these labeled. This is my second DPP. So DPP 1 for $1.40, DPP 2 for $1.15. I'll keep an eye on these. And look, net, if I watch this for the day, and I'm showing, let's say $100 total or $150 total for the day, I'm just going to take the profit. This is not the type of day where I want to sit and hold it all day. If I'm up $100 to $150 on the day, I'm just going to take the profit. I'll take that as a win. My max profit is $255. So I'd be pretty happy at 150 or better for profit today. Okay. All right. Let's see here. Let's have a look at some other stuff while we're together. Let's get a quick peek at some earnings. So after close today, I'm just going to take a look at a couple of tickers here. Right now, Feb 26. That's out 10 days. That's not too bad. I'm looking at HL here. So Hecla, which I don't even know what that is. HL. Mining company. All right. So I've got some decent sweeps in the Feb 26, but it's kind of a mix. I've got bullish and two bearish is kind of a toss up trade. I'll pass on that one. I'll see if we get something a little bit simpler to read. Palo Alto PANW, Feb 26. Again, a mixed bag, one bullish, one bearish. I want to see like more directional bias there, so I don't like that one. It's a bit of a toss up trade. I'll keep an eye on that one for maybe a cheap calendar spread. Alan, great question. Alan says, "Why do you want to take on the 1385 risk to make $1.15?" Well, because I really have about a 95% chance that it works. So I can't have a 95% chance of profit with a 10 to 1 reward to risk. If I'm going to have a 95% chance of profit, I've got to take on more risk than reward. So if you take a look at the expected move for the remainder of the day, unless the VIX goes absolutely nuts, here's our expected move for the rest of the day. Plus or minus 38 points. My 67 is way down here to 7 delta. There's about a 93% chance this trade is going to pay me today. Okay. My expected move right now is in the shaded red zone. Are my calls safe? They look like it. Are my puts safe? They look like it. So that's my chance. Like if I'm trying to make some money today, it's just trying to stay outside of the expected move and not try to play in the noise. So is it a good reward to risk? No, it's terrible. But it's a higher probability trade that hopefully I can grab some partial profit on as time works in my favor. If I give that trade 60 minutes or 120 minutes, maybe I can grab 50% and I just take the profit. So for the day, like I said, if this is up, and right now I'm up $90. If for the day, if I want to take these trades off and grab $100, I'll just take $100 for the day. And then I get rid of it. I take my $100. I have no risk on the trade and I'm $100 wiser. So that's why I'm doing it. So we'll see what happens. I'll keep monitoring this for the day. Okay. All right. I'm going to do a couple more here. C, D, and S. Nothing there. DVN. A little bit of premium on that one. Nothing crazy. So DVN's a maybe. So PANW. DVN is a maybe. EQT. A little bit, not a lot though. SSR. That's a leap. Toll Brothers. That's a maybe. KView. Nothing. MKS. Nothing. FE. Nothing. Let's go tomorrow. ADI. Light Premium. SEDG. Nothing. Garmin's got a decent one. GRMN. LBTYA. Pump. CSTM. VRSK. Maybe. I'm looking at just earnings for today's close and tomorrow's open. So CSTM. Nope. VRSK. That's maybe. That's actually no, never mind. That expiration sucks. That's way out to September. I thought it was Feb. Fiverr. FVRR. Nothing there. ICL. Nothing there. All right. Carvana, CVNA. Wow. A lot going on there with March, February. Feb 26, lots of bearish puts on Carvana. Okay, let's have a look at this one. CVNA. Carvana, if it's cheap enough, see what the expected move is. Even if I did a debit spread, this one wouldn't be terrible. Carvana, 27th expiration. We have earnings on the 18th. Got to do a put spread for some profit. Expect the move gets us down to here. What's a put spread? 335 by 330. I mean, I can pay $200 to make $300. It's not terrible. If we go lower, I could tighten it up and pay $1 to make $1.40. That's fine too. Okay. I don't mind this trade for a little newsbreakers. Carvana, this is out this week. Do we push immediately? That's the question, is do we push immediately? If I go Feb 20, earnings on the 18th, if we get an immediate push and I have all I need is the spread. If I went 340 by 335, that's insane. 340, 335. Slide this down to one strike. That's not terrible. Pay 225 to make 275. If price just pushes down a little bit, this one should be if I want to tighten that up, $1.15 to make $1.80. I like this trade. I'm gonna take this trade. 70. Let's see if we get like 70 cents debit here. $0.70 not filling. I'll try the mid at 73. This is 250 wide. This is a pretty good reward to risk opportunity. See if we get 75 cents here. The bid ask is pretty wide. 80 cents. Come on, you piece of crap. 85. Bro. 90. All right, final offer is $1. That means I can risk $1 to make $1.50. Well, that's lame. So the spread's not filling like I want. 35 there. Now it's 1-1. That's so crazy. Why is it such a bad trade? All right, I'll try $1.05. Unbelievable. Like I want to go for a bigger than I want to go greater 1-1. It's an earnings trade for crying out loud. $1.10. $1.15. Not filling. That sucks. Just the puts are expensive. I don't want to just buy puts for $2,000. It's like I'm gonna try to keep the risk under a couple $100. But there's lots of bearish plays going on in Carvana right now. So for Feb, expected move. Let's see what so 51 points. That's like a percentage on this one. I'm gonna try to find a trade here. 51. We'll go $51. See that the plus minus is like 51. So 51 out of a 339. We're looking at about a 15% move on Carvana. Okay, daily profit, by the way, should be looking good for some decent management here. 45 and 40. I'm up about $80 to $90 right now. Just going to keep it on this. We need some more time decay. Hopefully, prices cooperating a little bit. Yeah, I mean this just needs a little bit more time. I'm going to try to go after like $125 to $150 on daily profit play combos today. All right, let's go Carvana. Got to log in here. All right. CVNA. Earnings history. All right. So broker shows about a 15% move. Average move is about 17. So long options tend to be the play for Carvana. Let's see something here. If I did a maybe a reverse, this would be this is a little dicey, but I'm going to do like a reverse iron condor, see if it offers something decent. If I went 330, 335, 345, 340, that's awful. Gross. The bid ask is just so wide in this trade. It kind of sucks. So anyway, I mean, if I look at some volume and some option activity, it's mostly positioned for like a bump bearish. Should be positioned slightly bearish. I just don't want to spend two grand on a guess. I'm trying to do a spread here, so it makes it a little bit more cost effective. So a 330 by 25. Like how is this more risk going out of the money? Fudge muffin. All right. So if it moves the expected amount, let's take a look at this. How many times in post earnings do we do at least 15 to 17%? Let's do some math. So I need to get at least so 8 days in, it hits. So that one is good. This one is good. This one gets there 13 days. That's kind of my cutoff point is I don't really hold options for earnings past like 2 weeks. So that one's very close, but it does a lot of nothing. I'm just going to say no to that one. This one does. I mean, it's like the market moves like way after. Here's 3 days in. That one's fine. This one, fine. This one does not. This one, huge move. Huge move. Does not. Huge move. Right. So you see that the tendency is there's a lot more like hits of the expected move than not. So if anything, it's like long options or directionally playing Carvana is going to be a better choice. I mean, right now, these last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. We have what, 10? We have 10 times that it's hit the expected move, and we have 3 times that it has not. So, I mean, being directional would actually be beneficial. And you don't have to be bullish or bearish. It's just being directional. What I'm looking for is, do we hit the expect? I mean, I guess the cheap way to trade this would be something like really cheap, like, okay, Carvana out to the 20th. We're trading around. When is this earnings, by the way? I think this is Thursday. Carvana is Wednesday after close. So we can look at this one tomorrow. And that way, Wednesday after close, Thursday, Friday would be our kind of management day. But if I just look at a trade now, let's say I did like the 337.50. So if I sell the 20th and then I buy the 27th, same strike. God, that's $6. Ugh. That's expensive. I don't like that trade. If I did a calendar spread for under $1, I'd probably take it. But for $6, that's a lot of ask. That's a lot of it's a lot of risk to see, like, could it stay inside that expected move? That one kind of sucks. If I did an iron fly, it's another way to look at it. Go to the 20th. Maybe play around with these numbers. Again, this is going to be pretty expensive. But you can get, $53 in premium. I just don't want to be crushed on one side or the other. So if we go 337, let's make it easy on numbers. Let's go 340. 340 to 380, 340 to 300. I'm risking 1,000 to make 3,000. Price has to move, excessively. But again, if it gets the expected move, I'm toast. So that's just a lot of risk. I just want a debit spread. That's all I want. Just a cheap debit spread, and it won't give it to me. So that's what I want. For $1.25, it's a 1-to-1. It's fine. That's way more risk. Like these spreads are terrible. So let me try a $1.20. $1.20. I'm risking $1.20 to make $1.30 if price goes down. Let's see what happens. Of course, it fills. All right, I've got to trade in onto Carvana. Newsbreakers, new trade, CVNA. It is a 217 expiration. I'm sorry, 220 expiration, and I'm buying the 337.50, selling the 335. Paid $1.20. And that would be 250. Excuse me. 250 max credit, which would be $1.30 net profit potential. Looking at bearish pressure on CVNA. Okay. Trade alerts out. Newsbreakers. All right. Another trade coming out. That is CVNA. Today is the 17th. Uh, 220 expiration, 337.50, 335, $1.20 debit. Okay, so if price goes down below 335 by Friday and stays there, awesome. We'll make $1.30 on that trade, and it's a decent return. So 130 out of 120, it's 108% return on risk. I'll take my chances. Okay, so we got a trade here on Carvana. Highlight that one. I'll price out some other ones today. DoorDash, maybe. Let me keep looking at a couple more. So Carvana, decent. Let's go. Let's see. CDE. Nothing pressing on premiums. PAAS. Those are long term. DoorDash. Decent premium on the bearish side, but there's only one. That's not terrible. DoorDash is like. So Dash. Feb 20th. Expect to move $20. So what's 1993 out of the 161? About a 12% move. There's not a ton of history on DoorDash, but let's see what the earnings give us. Average move is about 10%. What? So broker says 12%. Average move is only 9%, 7%. Ah, this could be a calendar spread, ladies and gentlemen. If I sell the 160 and I buy the 160 for $1.60, let me build this one out. This one actually might be pretty good. Let's go Dash here. Dash for the Feb. I'm going to build out a calendar. Or my calendars. Calendar call spread. So if I build out the 160, so I sell the 160 at the 220 expiration, and I buy the 160 227. My break even prices. So what I look for 133 to 195, 133. Okay, my break even. So I mean, we'd have to go outside the expected move, and then 195. That's outside. That's outside both the expected range. That's kind of good. Let me see. I mean, if I can get a cheaper debit. So if price just stays like somewhat choppy, somewhat indecisive, that could be good on DoorDash. I didn't put it in Telegram, Jeff. I put it in this Zoom chat. If you scroll up in the Zoom chat, or let me just find it again. I'll find it. Yeah, it's right here. So it's a bonus hedge trade. It's not filled yet. It's not filled yet. It's just got to be a pending order, but this is the trade I'm posting in the chat. There you go. Okay, so I'm going to try this one on DoorDash. Buy the 160 for the Feb 27, but sell the 160 for the Feb 20. And that's a calendar spread. I'm looking to see if price just stays within the expected move and try to turn this into like a 50 to 100% gain. So let's see if we can get this filled for like $1.35. I'll play around with the debits here first. And that debit's going to be my max risk. So 40. That's pretty good. That's $1.40 fill. I got filled on that one. I'm happy with that one. Newsbreakers. Again, from the looks of it, like expected move is greater than what the average move is for earnings. So if we just have like a bit of a chop fest or not a lot of movement from DoorDash, and that release is on what day? DoorDash is Wednesday after the close. So we've got Thursday, Friday to manage it. But if we come in Thursday with limited movement, DoorDash could actually be like a really good trade. So it's max risk at $1.40. That's not too bad. Newsbreakers, new trade. So Dash, this is going to be a 220 expiration sell, 160 call, and the 227 expiration buy, 160 call, $1.40 debit. Max risk, looking for Dash to stay within the expected move for average earnings. And I'll be targeting 50 to 100% return on risk. Okay, so Carvana and DoorDash. So I'm going to put in here for newsbreakers, and newsbreakers. All right. Trades in, Carvana and DoorDash. Any others we can take a look at today? FIG. Nothing crazy there. RGLD. Nothing there. UQX. Got some bunch of like gold and silver miners in here. eBay. eBay is longer term. RELY. Nothing there. Walmart. Feb. Lots of bearish. Holy crap. Lots of bearish on Walmart. Walmart's pretty liquid. Fudge. It's already starting to move a little bit. See if we can jump in here, maybe get ahead of it. Walmart. Can we stay below 130? Like pay under $1 to make $1. If price goes down, we're expecting a $7 move on Walmart. I mean, this could go right back up to 135 again. Two-way. I'm just trying to think how I could play this one. I could take a debit spread right now to make it 1-to-1, and then even doing like a bear call spread at an expected move might help kind of save the trade. I'm going to try 2 trades on Walmart. This one for, let's try to get 90 cents in this. We'd be risking 90 cents to make $1.10. If price goes down, I'm just getting some decent put premium. All right, let's put pressure on Walmart for sure. Out to the 27th. Let's see if this one prices out the right way. 130 by 128. Yeah. I'm going to go out to the 27th. Take this for, let's see if we get 85 cents. So not filling. Try to go 88, just above the mid price. 90 cents, just above the mid price. No more. I'd like to pay less than $1 for this trade. I'm just going to go up penny by penny. All right, 91 cents. That's a debit spread filled. And then on a bear call spread, I'm going to try to do a 140. I'll try the 140 by 143. Actually, let's go this. 140 by 144. Get this one filled for 250 to risk. Let's try. This is going to be a tough one, but get 250 to risk 150, and it's a bear call spread. That way it can cover the cost of my debit. So if price goes up, I have a game plan or like a secondary plan. So if we go down, we get paid here. If we go up, I might lose here and get filled. And as long as price fades by the end of the month, we can make hopefully up to 250 on this trade. So I'm going to try to put in 250 credit to risk $1.50. I'll do a bear call spread here, 140 by 144. Try to get filled in this one. All right, that's a pending order. So Walmart's coming in with another newsbreakers. New trade, WMT, 227 expiration. So I'm buying the 130 put, selling the 128 put. That was a 91-cent debit. And that would be a $2 max credit for a net $1.09. And then Walmart, 227. Sell the 140 call, buy the 144 call, 250 credit, and $1.50 max risk. This one is pending. All right, so one trade is filled, one trade is pending. I've got an XSP feed right now. Take a look. XSP live is back up to 683.62. Looks like the market's got some fight in it. That's going to help our engineered options trade for the day. Walmart news trade. And we'll keep an eye on that one. And then XSP. That trade got filled for EGO Weekly. Okay, so this trade is up. I need it to stay above 684. That's a nice little rally. Let's see if we get there. So if we get above 684 and stay above 684, if between these trades, so this is worth 50 cents with 4 contracts up to $200. If I have profit here and loss here and loss here, that is break even or better. I'm going to try to manage the break even trade or better. Ideally, if we're gonna be closing above 684, then I'm going to make money on the week. Okay, so I'm not going to be too cute with this. I can let it obviously go and expire. But if I'm break even or better, we essentially come back from the brink of taking a loss the last week engineered options and close out for break even or better. That's a good thing. No risk is a good thing when the market's down 3%. Okay. Mark says didn't have enough funds. So you don't have $400 for that? Little tight in the head trade. On your counter spread for Dash or others, what matters is why you go to the strike above 50 delta. I mean, I'm going at the money. I mean, Dash is trading like at one. Dash is trading at 163. I mean, the strikes are 250 wide. So, I mean, literally, I was trading at the money. I was at the money. So I mean, perhaps I'm in it. I should have waited till tomorrow. But I mean, the day isn't done. The week isn't done. I'll take my chances. It's a pretty big expected move. So I'm trying to take advantage of the expected move that's going to be wider, and hopefully it's going to be wider than the actual, and that's how the calendar spread works. Plus, we have the vol crush. Yep. Okay. All right. Deanna just reminded me. So I'm going to wrap things up here for our daily profit plan. So we'll wrap up today's session. Waterfall income. Let's have a live class in about 15 minutes. We'll look at another trade here. Just a quick summary for me today. Let's go notepad. Just do a quick summary. Today's live session. So XSP is price greater than 684. If yes, then we win the week from engineered options from last week's trades. Okay. SPX Are we less than 68.80 and greater than 6,700? Are we less than 60? What to do? 900 and greater than 67.35? If yes, then we have profits to manage or full winners on today's DPP. What else? Earnings. I have a trade on Carvana. I have a trade on DoorDash. I have a trade on Walmart for earnings this week. I'll price out a couple more. Palo Alto, Toll Brothers, Garmin. I'll price out a couple of those, see if I can like them. And then Waterfall Income, 11:30 a.m. Eastern Time live session. Come join me for members. 2 p.m. Eastern Time today. Pinch Point Scanner. Okay, members only invite. And 2 p.m. Eastern Time, it's time for Pinch Point Scanner Show and Tell. Okay. We got a pretty awesome price, and I'm really happy with the upgrades. Just going S&P 500, all the ETFs. We have some really good pinches and setups and coils on the indexes. It just tells me that give this market 30 to 60 days, something is going to happen directionally. And obviously, if the S&P is going to move directionally, the whole market's going with it. So whether the S&P goes up or goes down, we're going to try to figure out how to trade that and then see what the markets do too. I do think that the market is still vulnerable to the downside because we're just testing and testing and testing. We've seen individual stocks in the software side and logistics and trucking and financials. Like a lot of things are getting beat up with this heavy rotation. I do think a lot of stuff is getting beat up, and it's kind of the saying is like throw the baby out with the bathwater, where it's like, oh, it's toxic. AI is disrupting everything, and they just dump really strong companies. So like IGV software and individual software companies are down 50+%. I mean, it's probably a little bit beat up fundamentally. So if you're looking for some value, I think those are some interesting buy opportunities. But all I'm looking for Pinch Point Scanner is if we have the stocks consolidated and we're in these really nice coil environments in a 30 to 60 day window, we typically get really good directional plays that we can participate in. Okay. All right. Good stuff. Dash trades. Yeah, if you're in newsbreakers there, so Carvana and Dash and Walmart so posted for newsbreakers in the alerts section. Okay. All right, very good. So this is kind of the summary for the day. XSP, if we stay above 684, we're going to win the week last week. We got a new trade already filled. SPX, our daily profit plays, earnings plays. I'll price out a couple more, but I have live trades in Carvana, DoorDash, and Walmart. Waterfall Income will have class in about 10 minutes. Pinch Point Scanner, members only. Come join me at 2 p.m. Be fun to talk about. Okay, and I'll show the upgrades at the session as well. Cool. All right, I'm going to take a little breather, grab a quick bev, and I'll see you Waterfall Income here in about 10 minutes. Okay, daily profit play really quickly, just a spot check. We should be up. We're probably up over $100 now. I would imagine since price is back to kind of neutral. SPX for the day. Let's go positions. Daily profit play is up. What? It's down. This one's up. Like, what the hell, dude? 684. Are we creeping up to, is it? Hang on. We're at 68.44. Is it just because the direction's been so aggressive? All right. Anyway, I'm just going to let these cool down a little bit. If I can have, like I said, about $125 to $150 total on the day, I'm going to take some profit. So, I mean, as long as we're below 68.80, we should be good on this one. This one actually looks really good. Okay, so it needs some time. Okay, yeah, we're back up to intraday highs. So market started right in here for the day. This is where we open on this dotted red line. We're back up above that. 68.80 is the positive gamma. This market is, right now it's like a big fat nothing burger, but it's positive. Futures has turned positive. Not a bad, I mean, it's just support. Like that's all this market's showing us is it hits support and it rallies, hits support and it rallies. So it's holding. It's just depending on whether or not we're going to get, up to fresh highs and, take out 68.80. If we did that, that is pretty silly. If the market rallies up here 104 points to take out those highs, that's a pretty silly day. Could have happened, sure. But, really, this is where we started the day. So I'm just hoping that the market's not like totally lopsided one way or the other. All right, we'll figure it out. So more grind. We'll talk soon. Waterfall income. I'll see you in 10 minutes. All right. Take care. Bye.